You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. It is a dangerous world out there. Volatility is on the rise, and your clients' portfolios are under assault from a growing number of threats. Simple diversification is no longer enough to shield the assets under your protection. Registered investment advisors, financial planners, and asset managers need a new weapon in their war on risk. Welcome to the Advisor's Option, the program designed to arm busy advisors with the information necessary to properly manage risk in this volatile environment. From options education, trading strategies and tips, to industry news and interviews, you'll find it all on the Advisor's Option. The Advisor's Option is brought to you by the Options Industry Council. The OIC was created to educate investors and their financial advisors about the benefits and risks of exchange-traded equity options. For more information on how the OIC can help you implement options in your practice, please visit optionseducation.org. The Advisor's Option is also brought to you by Option Research and Technology Services. ORATS is your source for options backtesting. It's where you turn your ideas into results. Founded on the floor of the SIBO over 2 decades ago, ORATS is a full-service option research firm focused on helping you develop options strategies in line with your investment objectives. With a state-of-the-art backtesting platform, scanning, and implementation tools, ORATS offers end-to-end option strategy development, making the whole options trading process easier. For information about backtesting, scanning options data, including dividends and earnings, visit orats.com or email Matt Amberson at matt@orats.com. And now, it's time to learn how to implement options in your practice. It's time for the Advisor's Option.
All right, everybody. That music means we are back once again for the Advisor's Option, the program here on the network for you, the busy financial advisor or asset manager. Maybe you're thinking about dipping your toes into the options waters. You know, they hear the water's fun. You want to dive in, but you're not really sure how to get started. We're here to be your lifeguards on that journey. Maybe you're already using options in your practice, but you want a little bit of a refresher on what's going on, how to use these things. Maybe you're a client out there looking for an advisor and you're wondering what skills they should bring to the table. Either way, we got you covered here on the Advisor Option. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever compelling Options Insider Radio Network. Shows coming at you pretty much all week long, usually a couple of shows a day. If you want to join us live for those programs, as well as get, of course, exclusive content like great pro Q&As. Mr. Matt's been on, Mr. Bill, as well as many other great guests, as well as, of course, Options Oddities every Friday, where we break down all the weird and wild goings on in the world of options from an unusual activity perspective, as well as great giveaways and a whole bunch more. Theoptionsinsider.com/pro is the place to go to begin that journey. Let's begin our journey on the show today. First, let me go out to my compatriot, my partner in all things Advisors Options Crime, Mr. Matt Amberson, the founder over there at ORATS, a.k.a. Options Research and Technology Services. Though around here we call him the Oracle of New Hampshire. Mr. Matt, welcome back to the show, sir. It has been too long.
It's been too long, and there's been some great stuff going on. We have a lot to talk about. Excited to be on with our guest, too, Mark.
Yes, we are also joined this episode by an old friend of the network, even though he's first time on this program, Mr. Bill ULIVIERI, the principal over there at CENACLE Capital Management. He also spent a lot of time back in the day on the floor of the SIBO as a market maker and risk manager, is also working these days over there at CENACLE to kind of bridge that divide between traditional assets, so your stocks and your options, and your digital assets in the world of crypto. In fact, he is working on the upcoming book, Essential Estate Professionals Toolkit for Recovering Cryptocurrency. So he's literally the guy who wrote the book on bridging the divide. Mr. Bill, welcome to the Advisor's Option, sir.
Oh my gosh, thank you so much for such a kind introduction. And it's great to be on a show with Matt. And of course, it's always great to be back with you, Mark, on a channel and talk about things.
A lot to unpack and a lot going on in the market. So let's get to it with the P&L statement.
What the heck happened in the options markets since our last episode? Let's find out with the P&L statement.
All right, everyone, welcome to the P&L statement, the segment that was born of the pandemic because so many wild and unprecedented things were happening between episodes of the Advisor's Option that we spent a lot of time discussing them. So we decided, we need a segment. And thus, the P&L statement was born. And you know what? Since our last episode, it wasn't that long ago, a lot has gone on in the market, including coming off the heels yesterday of pretty much the worst rout we've seen in the market since the mad days of 2020, listeners. So a big sell-off, S&P off over 4%, NASDAQ looking even worse. So rough times, a little bit of a rally on the screens today, but still inflation dogging the heels of the markets. A lot to unpack. Since you're our guest, Mr. Bill, we'll start with you. What are your thoughts on these mad markets we're seeing right now, sir?
Well, so many different opinions make up a market, right? That's, bids, offers, positive, negative, bullish, bearish. I don't think yesterday's decline was as big a deal as everybody is making it out to be. I saw very little change structurally in how we're viewing things. Growth is still appearing to be outperforming value. Fixed income is back to like 2011 to 2013 rates, like TLT and some of the higher yielding bond ETFs. The Fed certainly seems to be pounding the table about their attacking the villain of inflation. And I guess what I see is I don't know if you guys remember the opening scene of the movie The Matrix, where the police officers are going after Trinity. They want to arrest her. And the agents, of course, show up and they say, Sergeant, you were told to wait for us to arrive. And the sergeant says, well, it's just like one woman. We sent up a couple of teams to bring her down. And the agent says, no, Sergeant, your men are already dead. And so I attended a really interesting conference yesterday. Everybody's freaking out about inflation. Everybody wants to start selling and shorting the long end and the bond market after it's been down 26%. And it's really interesting to me that I think if you look at energy, commodities, silver, gold, like all these inflation complexes, they're down between 15 and 30%, from their highs. So I'm wondering, is it possible that inflation is already dead? We just don't know it yet. So that's kind of where I'm coming from. I see things actually not that bad.
I like that. Your men are already dead. The market is already dead. No, but you're right. I'm looking at a chart right now, and for all the noise, all the Sturm und Drang of the sell-off yesterday, this pretty much just brings us back to the exact same level we were trading at back on September 6th. So a little over a week ago. That's pretty much all we've done. We rallied and gave it back. We gave it back kind of aggressively, but we gave it back. Sure. Mr. Matt, same question for you, sir. You're always looking at a lot of different models and different metrics for what's going on out there in the space. What are your thoughts on A, the kind of mad sell-off we saw yesterday, and B, all the other tumult that has been unfolding in the markets in the last couple of weeks?
Yeah, I'll take a different tact. Everyone, we talked about it last month. Don't fight the Fed. Well, people are fighting the Fed. They have said very explicitly that they want to get inflation down to 2%. It's running much higher, 6 to 8, and probably higher than that. And they're going to take whatever it takes approach to it. And so that is going to really hurt the market. If that comes to bear, we're going to be sitting down near 3,000. And we're in my estimation is we're in a bear market. That was a bear market rally that we just had. The technicals that we look at don't go out that far, but they're still kind of in a rising implied volatility channel, which is bearish. Contango and backwardation, it's in backwardation and tending towards more backwardation, so that's bearish. And then we look at these forward relationships, and that's bearish. So I think we have a chance to rally into this channel, but the channel's down, and the Fed governors are saying that this is at least a year when they're going to be trying to fight inflation. So I think seeing the CPI print yesterday woke some people up, gave the people that are a little bearish some headway. I'm not that bullish right now. I think if they are raising rates, wow. I mean, we're looking at the 21st is when they make the decision on how much. It used to be a chance of 50 basis points. No chance of that anymore, according to the futures. The 75 was 90%. I think now it's more like 66%, and it's a 33% chance of 1 point. I mean, that is going to be a bloody time. So don't fight the Fed. Everyone calm down. The Fed's watching the market. If the market rallies, they're going to do 1%. If the market doesn't rally, they might stay at 75 basis points. But I'm afraid that it's going to be a little bit of bear ahead, Mark.
It's funny you mentioned the Fed. We just had a guest on our Pro Q&A yesterday who's been on this show many times, Mr. Ash Vyas, formerly of Swan, now over there at Resonance Capital. And he was saying, along the lines of what you were saying, Matt, that he thinks the Fed has a credibility problem right now. No one's buying what they're selling. They keep talking about being very hawkish, trying to raise rates and slow things down, and yet folks are just rallying this market almost in spite of that. So you're right. They are fighting the Fed when it comes to that. They just maybe don't believe what the Fed until yesterday. Then all of a sudden, everyone had cold water thrown in their face a little bit out there. Fascinating stuff. We'll get into more of that as the show unfolds. But now we got Mr. Bill joining us. So we want to get into a little bit of the old tricks of the trade.
And now it's time for practical tips on how to implement options into your practice. It's time to learn the tricks of the trade.
All right, everyone, welcome to the Tricks of the Trade. Going to do things a little bit differently on this segment. It's not an option-specific trick of the trade. We're going to expand that title, the subject matter, a little bit to include all things crypto. Because if you're listening to the network listeners, you know that Bill has joined us on the Crypto Rundown many times. He does a lot of work over there at CENACLE in the digital space. And this has also become a frequent and growing talking point on this show. Big firms like Fidelity and others starting to open IRAs to Bitcoin and investing heavily in the crypto space, and products like Grayscale and, of course, BitO out there really making crypto more approachable for the traditional long-only asset manager out there. So we've slowly but surely been discussing this topic a lot more on the show, including just a few months ago. We did a deep dive into BitO here on the show, and we kind of revised our thoughts on it and said, maybe our initial skepticism was maybe a little bit too aggressive. Maybe this product is actually doing a better job of tracking and delivering what people want from it than we assumed. And also the fact that it's optionable certainly puts it ahead of the pack for a lot of people out there who want to approach it from an options perspective. We're going to get into that today in terms of all things crypto, the intersection of crypto and advisors. Maybe, Bill, let's start there. Before we get into the specifics of what you're talking about with your book, I'm just curious for you and for your take. This is obviously still a growing space. It's still a nascent space. From you, you said you went to a conference recently. You've been doing a lot of engagement with this space for years. Overall, how popular would you say crypto is with advisors right now?
If we were to be invited to a conference room where we had, say, 100 investment advisors, doesn't matter whether it's 10 million of AUM or 10 billion of AUM, and you ask to see a show of hands to say, how many of your clients have inquired about cryptocurrency? You would see about 80% of those hands go up in the air. then the next question would be, how are you servicing your clients with cryptocurrency? And about 80% of the 80% hands would go down. Investment advisors are still uncertain as to how to advise clients on the ownership and purchasing and storing of digital assets. So there's still a little bit of sideways action amongst advisors, but they are totally getting almost bombarded by their clients to know more about digital assets. And here, Coinbase just did a deal with BlackRock to provide a trading workflow, like a portfolio view of assets globally. Like BlackRock would not have done this deal with Coinbase if they didn't have their act together in terms of compliance and safety and security. So now as an investment advisor, just like I can pull up a global view of my stocks and ETFs and covered call positions and my theta and the volatility, like this portfolio-wide view, now I can include cryptocurrency as a part of a risk-on asset and see like what my position and what my portfolio looks like. Yesterday, it was just announced that Franklin Templeton, massive asset management company. I mean, they're one of the biggest, right? Franklin Templeton is permitting separate managed accounts of cryptocurrencies for their clients with a company called Eaglebrook. And then yesterday, it was announced that Fidelity, Schwab, Citadel are launching their own cryptocurrency exchange. Right? That news was broke on the 13th. That broke yesterday. So they issued a press release saying that they're going to, the trio of the biggest, right, are going to manage and create and form a cryptocurrency named the EDX market. So, man, I am telling you, we're still like in the first inning of this whole thing. So if you think cryptocurrency is going away, you're watching your newsfeed is tuned to the wrong frequency, because this is it, man. This is the future, and they're running with it like you can't believe.
Yeah, I mean, that BlackRock news was certainly big. Now, of course, you're right to mention the Citadel news, the next wave. It does seem like they are just coming in waves, new developments all the time out there in this space. So you've been playing in this space for a while, certainly probably a lot longer than most other advisors out there. From your perspective, what are the advisors using? What vehicles are they trading and investing in for their clients right now in crypto?
Well, right now, from talking with other advisors, I mean, right now we have exclusively used the Grayscale Bitcoin Trust. But again, at this conference that I went to, my curiosity is piqued with the products from Bitwise. Now, Bitwise does not pay me to say that or anything. I'm just saying that they have a really interesting indexing type fund. The symbol is BITW. They also have something called the Bitwise Crypto Industry Innovators ETF. Now, I find this one really interesting because it includes the companies that are really deep into the blockchain space, like MicroStrategy's, Coinbase, Silvergate Capital, Riot Blockchain, Marathon Digital Holdings. So it's more of a security equity type of ETF that I find really interesting. And theoretically, you could take the top 10 holdings of the ETF, and you could buy them individually and sell call option premium or sell downside puts. Like you can also recreate the ETF if you want, if you're more of an option trader. So there's a lot more innovation there. So the advisors are kind of looking at that. And also they're looking at the ARK innovation funds. Now, off the top of my head, I think it's just the ARKF, which is the blockchain technology centric one. But they have one other ETF. I just don't remember the symbol that is looking at blockchain inclusion into the ETF. So advisors are still looking at that way in terms of being able to do something right for their clients.
And you mentioned the different products out there, and there's a growing offering on that side as well, which is nice. If we do the show again in 6 months, I'm sure we'll have even more products to talk about on the crypto side. But the other thing we're hearing a lot from people is that they were really excited, let's say a year ago or even 6 months ago at the beginning of the year when crypto was much higher. Obviously, we dovetailed into a bit of a crypto winter there for a while. Bitcoin selling down below 20,000, ETH coming down hard. Most of the major crypto assets really selling off over the last few months out there. So we're hearing mixed things about how that has impacted client demand. Has that shaken some folks out of their interest in the crypto space, or are they starting to get back in? I'm curious from what you're hearing out there, Bill. Is this big sell-off, this crypto winter 2.0, 3.0, call it what you will, has that impacted what we're seeing out there from a client demand perspective? Are they still as hot as they were at the beginning of the year, sir?
Well, are people still as hot for Peloton and DocuSign and Zoom and Roku? Probably not, right? So we see Bitcoin as risk on. I think the big question is there's two questions out there. One is, why hasn't gold performed as promised with its protection against inflation when we see high inflation lately? And how come Bitcoin, which was supposed to be the new gold, right, the new digital gold, how come that hasn't performed as an inflation hedge? So once again, Bitcoin is this very new asset class, and it was originally designed to be a digital currency. Then it was thought of as an exit ramp, this unsystemic type of risk in the market, and then from there it went to it's an inflation hedge, which in fact it hasn't really been. It's risk on, right? And so it's just really interesting that the conversation has changed. You've heard me say this numerous times that if Bitcoin was a Marvel character, it would be Mystique. It's always being able to switch from one thing to the next, and that's a good thing and a bad thing. So I would say client demand is still down, but there are people really see that this is the new internet of the 90s, and they are holding with diamond hands, and they're continuing to buy small pieces of their crypto holdings using Coinbase or whatever wallet of choice.
Now, Matt, one of the things we heard a lot about when crypto was really coming into the mainstream back in 2017 and into early 2018, when it was really first capturing a lot of people's attention. We saw the futures launching. It was obviously it had been around longer than that, but that's when a lot of people in the mainstream really caught on to all things Bitcoin in particular, and then ETH. The thing that a lot of them gravitated to was the fact that it was supposedly this uncorrelated asset class, and you could put it in there alongside your equities and your fixed income and whatever else you had in your portfolio, and crypto would do its own thing. It was completely uncorrelated. And as we've seen now, as the years have progressed, it is actually the opposite. It is highly correlated. In fact, many of our guests on the Crypto Rundown refer to it as a high beta tech allocation. That's kind of what it is. It moves almost in lockstep with the markets most days. So I'm curious from your perspective, Matt, both from analyzing and from, being an advisor and looking and talking to other advisors. Do you think now that we have realized that now we see that crypto is actually very much highly correlated with the equity space? Do you think that kind of hurts its utility for advisors a bit?
Yeah, it definitely hurts it. But my history on it. I was looking at being a miner when Bitcoin was 100. So I've been involved in it for a long time. I've always been ambivalent. Like, people try to explain to me, and I have a finance background. I just I'm like, okay, how is this not a Ponzi scheme? The first people in, they're getting millions of coins and buying pizzas and such. And now, it's gotten to the point where everyone's in. And I love the concept, believe me. But you have the Federal Reserve. That's the huge elephant in the room that they're not going to let something compete with them. So it's either a psyop where they're trying to get people into crypto to finally get their digital currencies, which they want, so they can control every move that we make. I just again, I'm ambivalent. I wish it would work. I wish it was great. But you have this Fed here and this powerful government that's really going to use it to their benefit. And we're I wish Bill were right, and I love his enthusiasm, and mostly his movie references are great. But I just don't see it how they're really going to let people have this great asset. Now, that being said, I think everyone should hold a little bit. And I love BITO because I could hedge my my long Bitcoin, and as far as correlations to Bitcoin goes, I thought that we did that on the show, and I thought BITO was even better than Grayscale and some of the other ones. So I'm having fun owning, a certain amount of, I do the permanent portfolio and I put crypto in there. And I think, other people should have it for various reasons, but, I stand a little ambivalent. And the correlations, it is definitely, as Bill says, a risk on asset. And that really doesn't help its standing for a lot of advisors, Mark.
Mr. Bill, same question for you, sir. What are your thoughts on the notion that it is a very highly correlated asset to equities? And does that help or hurt its utility out there with a lot of financial advisors?
Boy, that's a great question. So I asked myself, so again, being at this conference, then I asked myself, was fixed income a quote unquote non-correlated asset on the way down? Did gold provide a correlated protection in the last, in year to date? What has gone up other than energy? And even energy has just gotten absolutely shellacked in the last, few months. So the question is, we've seen this kind of before in 08 and 09 when the market went down and fixed income got absolutely annihilated. And then, we kind of saw the ship turn rather quickly and go up. And actually have a great rally from the Great Recession until just recently, fixed income. As a matter of fact, I would say that if anything, correlations might even be returning to the way it used to be. I mean, and I'm saying that with quotation marks. I would say that there was an investment advisor that wasn't shaking their head saying, "Oh my gosh, look at what bonds have done since 2012, say, or 2016, and compared to the market." As a matter of fact, there was a point where advisors were saying, "I don't buy fixed income for yield. I buy it for capital gains." Right? Like who does that? We don't buy fixed income for quote unquote upside appreciation and capital gains. We buy it for yield. The same thing was said back during the Great Recession. I don't buy commercial real estate because it has a high capitalization rate of earning 3, 4, 5% on a portfolio. I'm buying commercial real estate as an investor because I think I can flip it in 6 to 8 months. So it isn't that the asset class itself has done anything wrong, quote unquote. It's that investors do the wrong thing with it, and then we talk ourselves into believing that it's something different. I'm not saying the same thing didn't happen with Bitcoin. I mean, gosh, during the COVID lows, it was trading like $5,000 a token, and it rallied to 60,000, and now we've sold off back into the 20s. So, correlated, uncorrelated, it's not a linear line. It's static. It's dynamic. It moves. It's still subject to emotion and everything that bring this emotional behavior that we bring to the market. I mean, okay, the market was down 1,300 points yesterday. Did the VIX really perform like, we expected? Did option volatility really? I mean, we're still lower than we were a few months ago. So, what does it mean? Right. It's a hard rodeo to ride is what I'm saying.
And Matt mentioned BITO. BITO, I know it's your favorite out there, Bill. We talked about it a few times out there on the crypto rundown. I know you said you were more of a Grayscale fan, and that's what you've used the most, but you've been starting to investigate BITO. It is, of course, the main optionable player out there right now with any sort of real size ADV, somewhere north of 60,000 contracts. So it's still putting up some numbers almost a year after launch here. Have you had a second look at BITO, and what are your thoughts on it as compared to some of the other vehicles out there, sir?
Actually, I do like it. I mean, I'll like it for the option side, and that is, the at the money or slight upside calls are really not, I think are fairly priced, all things considering. Year to date, Bitcoin is down 55.78%, and BITO is down 56.78%. So it's down only an additional 100 basis points. But it's made most of that back like in the last 7 days, where BITO is up about 1%, about 100 basis points more than Bitcoin. And so, yeah, I mean, I think again, I'm a little bit slow to move. I like the Grayscale products, and I still love them, right? I still like them as what they're doing for the industry. They're challenging Chairman Gensler on the conversion of the BITO Trust to an ETF. It's still trading at a 35% discount to net asset value. So I'm not quite sure how this is all going to play out, but I definitely am being more open and agnostic to the products I apply and use for my clients. And what we'll probably be doing going forward, I mean, we've already done a lot of work on it, is kind of look at it from a pairs trading position, like Bitcoin, BITO versus, GBTC, or is it Ethereum versus BITO? And, maybe we can just play the Grayscale products off the ProShare products, right? Just like we kind of play Russell 2000 versus NASDAQ, or Russell 2000 versus SPX. We grew up doing pairs trades most of our lives, right, on the trading floor. So I'm kind of exploring those options. And while they're all similarly correlated, there might be some alpha to add in these trades.
Always looking for alpha out there. And before we roll out of this segment, this kind of deep dive into crypto and advisors, the intersection, the Venn diagram of the two. I mentioned at the top of the show, Mr. Bill, you're busy cranking away on the official tome for this space. Tell our listeners what you're working on, what this book is going to be about, and why they should pick it up.
Well, thank you, Mark. I really appreciate the opportunity to talk about it. So, I had coffee with a gentleman that was in his 70s, and he actually, I was introduced to him from a meetup group that I was hosting in Glenview. It was called the North Shore Bitcoin and Blockchain Meetup Group. And after about 10 months, he invited me up for coffee up in the northern suburbs, and he disclosed to me that when he retired, his wife wanted to explore the arts and music and opera, and he wanted to get involved with Ethereum. So he purchased about $100,000 worth of Ethereum back in 2015. And at the time of our meeting, he disclosed that his portfolio was worth about $50 million. So he created a non-for-profit organization. It's going to fund inner city school education. But the truth is, in order to access his cryptocurrency, he had to go through his phone. And his phone had a 4-digit PIN code. And I don't think his wife knew what the 4-digit PIN code was. So it made me think that there are people all over the globe with tremendous amounts of their net worth in their phone, quote unquote, in their phone or in a wallet that can never be recovered if someone passes away. Like, what happens to your crypto if you're in a car accident and your body is, you have the final services, you're cremated, and then your family looks at your phone and they can't get past the biometric lock on your Apple iPhone. Can you get your cryptocurrency? Probably not. So the book really is a very short toolkit, very concise guide for estate planning attorneys, financial advisors, anybody in the estate business, as a way to have a conversation with your clients who are interested in cryptocurrency, because recovering digital assets after a client has died is virtually impossible. And so there's a lot of work's got to get done, and that's what the book is here to support.
So hack off dad's thumb after he dies, just on the off chance you need to get into his phone. Is that the takeaway from the book, sir?
Yeah, it's very James Bondish.
Maybe an eyeball too while you're at it.
and Jack Bauer. No, I'm serious. Like that's kind of what it is. I mean, I list a few actual use cases where a young man was killed in a car accident, and his parents presented all the information to Apple, which refused to set a precedent on letting someone whose name was not in the will, was not power of attorney, didn't have any kind of legal paperwork on file, access to the phone. So after 4 years, we have high 6 figures, potentially low 7 figures in cryptocurrency that will never be recovered by the parents. And so I'm telling you, this is going to be the next new thing. Well, I hope not I hope, but I hope I can help the next thing. And that is, there's a lot of people with assets, seed phrases, PIN codes, security features that their wives, their spouses, their estate planning attorneys and financial planners will never be able to recover those assets unless these, I basically boil it down to about 26 things on a checklist, 20 actionable items that should be done in order to recover these assets for heirs and for an estate.
All right, now let's keep on rolling. We are coming off the end of a pretty hot earnings season, so we got the right guy to break it down. It is time for the earnings volatility report.
Earnings announcements can move markets, but what is the options market telling us about upcoming earnings events? Let's find out with the Earnings Volatility Report.
All right, everybody, welcome to the Earnings Volatility Report, the portion of the show where we break down the impact that earnings and earnings volatility in particular may be having on your clients' portfolios. Mr. Matt, we're coming off the heels of a rock'em sock'em robots earnings season. Pretty robust, I think, to put it mildly, coming in at an average of 116%. Of course, listeners, that means if we took the average of all the straddles out there throughout the earnings universe, and if everything moved exactly as was priced in by the straddle, that would be 100%. We moved 116%. So dramatic outperformance. To my mind, I believe that is the most aggressive, the most outperformance in a cycle we've seen pretty much since we've started running these numbers, Mr. Matt. But I'm curious for you. You actually run the numbers over there in the land of Oretz. What are your thoughts on the, shall we say, robust season we just had, sir?
And just to wrap up the crypto, Bill's looking at how to recover. That's a great thing that's needed. I know Molly and I are working on that same thing. So kudos to Bill for that. Yeah. So switching over to earnings. So yeah, like you mentioned, you have the straddle, and then you have, so that's what the options market thinks the stock's going to move. And then you have the actual move, and we do that comparison. Now, one of the things that you have to look at is these straddles, they don't always expire on the last day. So there'll be some value left in the straddle. And from time to time, we go in and we show what that distribution is in order to calculate the leftover straddle. So we did adjust that. It put the actual versus implied moves up a little bit, but this still was a very impressive earnings season. And we've been looking for that. What we've seen, and I think the Fed has a lot to do with this too, is now that a lot of these the focus on growth is going over to focus on value. If you're focusing on value, earnings are a lot more important. So I think we're seeing the effect of that, and we just saw a lot of tumult out there with the interest rates, with who's reacting to inflation better than others, and it really was an interesting earnings season that's wrapping up here, and we're going to be ready for the next one, and we'll recalculate the historical average using our current distribution, so just to compare apples to apples. But anyway, that's what happened. There are only a few left out here. Adobe is coming out the 15th tomorrow after the close. They're trading 368. The straddle's looking like almost a $21 straddle. In the past, it's moved at about a 19. So it's about 0.5% over the past right now. That what's implied there. So they're still implying pretty large moves out there. AutoZone, same thing, a percent over. GIS 1.3%, KBH 0.5%, LEN 2% over. So those are the final trickle in earnings before the season starts next month, and it's looking pretty like they're implying a lot more volatility. And again, I think that has to do with what I was talking about before. So Mark, I think these earnings reports are going to be a lot more interesting. And the trades that we put out there have been doing pretty well. We took off the short straddle. I just don't want to be putting out short straddles, but it's mostly a long calendars, which are the best stocks for long calendars, and they've been performing pretty well. We just simulate putting them on and simulate taking them off, and then I look at them and see how they did. So that's the update on the old earnings there, Mark.
Matt, you mentioned this is kind of a pretty banger of a season. Are there any specific developments or any specific trades that really stood out to you, or any just overall surprises on this, again, super green season, sir?
Well, again, I mean, just the surprises is about how much stocks are moving now and how important earnings are becoming again. We're going to make earnings great again, I think, is the hat that I'll have. And we're with inflation and with investors starting to look more carefully at the actual numbers behind these companies, I think that's what's leading to this more of this volatility movement around earnings. And it's a breath of fresh air for me, Mark.
Well, let's see if we can continue that breath of fresh air for the rest of the show, because now it is time to get the buzz.
Busy financial advisors don't have time to follow the latest developments from the options market, so we do it for you. It's time to get the buzz.
All right, everybody. It's time to get the buzz, break down some of the developments in the world of options that you may have missed because, hey, we get it. You're busy dealing with your clients, as you should be, especially in these types of markets. I have to imagine your phone might be a little bit busy after a day like yesterday, so allow us to do the heavy lifting for you. And since the start of the year, really since the start of the pandemic, the ongoing refrain, the ongoing question in the world of options has been, can this tsunami of interest in options from retail, from institutions, from everyone, can this possibly continue month after month, year after year? And throughout August, all of 2020, the answer was a resounding yes. 2020, a record year, 7.5 billion contracts, somewhere along those lines. Last year, trumping that by a substantial amount, the meme stocks kicking in, lots of paper last year, closing in on nearly 10 billion contracts. But of course, at the end of last year, everyone said, okay, that's it. this has to be it. This has to be the apex for now. People are going to start going back to work, going back to the office, staying at home and trading on your phone or on your desktop will no longer be the national pastime, and those numbers will come in. They have to come in. That's what everyone said. And so that's been the debate so far this year, month after month. Can the party continue? And now we have the latest numbers from our friends over there at OCC for the month of August, listeners. And August, not traditionally a rock'em sock'em month for the markets. People are usually off in the Hamptons or in Europe over there in the south of France on vacation, not trading up a lot of paper. But this August, they decided to buck that trend. August volume up 13.3% from August of 2021. So you're talking a total of 912.5 million contracts. We've been saying for a while, are we going to hit that 1B, that 1 billion contract level in a month? And August threatening it. That 912 million, that I don't think anyone saw that coming. That was up again 13.3% from the year before. It's also the third highest month in the history of the options market. So was August busy? Yeah, I think you could say it was out there. The ADV also, which is an important measure, that's of course the average daily volume, listeners, also continuing to stay firm, up 4.2% from August of last year. So the ADV right now is 40.5 million contracts, listeners. So I guess if we stay on that trajectory, if we stay on that pace through the rest of Q4, we are looking at a north of 10 billion contract year, which is insane. A couple other highlights, which were kind of interesting. ETF options. Again, ETF options and index options were two segments that really lagged for most of the pandemic. And this year, they're starting to come into their own. ETF options volume up nearly 60% in August, and index options volume up nearly 59%. So huge surges in index and ETF options. Equity options, the traditional equity options you would assume, actually down 6.3%. So all of those gains came in index and ETF options, which is interesting. Mr. Bill, you kind of get a good spot to have to guess now because we've been asking this question for all of our guests all year long. Obviously, much more challenging in January than it is now here in September. But we are coming in onto Q4 now. We are coming into the tail end of the year. What are your thoughts on A, this dramatic August we just saw, and B, do you think this can continue through the rest of the year? Will we see another record year here in 2022, sir?
When you say record year, are you talking about just the option volume?
Yes. Will we eclipse the nearly 10 billion contracts that OCC cleared last year?
Mark, I got to tell you, Mark, I mean, I left the trading floor in September of 2012 and, just kind of clung on the side for about a year after that. But these numbers that are being put up, are being posted, I am absolutely blown away by the continued upward trajectory of options trading and option volume. I mean, I'm absolutely, I don't even know what to say. I mean, I'm completely flabbergasted because, again, I come from the world where options and derivatives were weapons of mass destruction, according to, Warren Buffett. This negative public relations problem that the CBOE had for years. And so I'm really excited to see it. I am so happy that trading firms and people seem to be doing well. The reports still from friends I stay in touch with from the floor, the volume and P&L is they're doing very well. And boy, but you're asking me about options volume is kind of like asking my dad to reset the clock on his VCR that still flashes 4 zeros. Like I don't even feel worthy or the expertise to continue. But yes, it certainly seems as we go into the midterm elections, this is going to be, we're going to be posting bigger numbers than I think that we expect.
Well, you're certainly not alone. And the folks who've been in the space for a while, these numbers are, I think, to put them mildly, flabbergasting. We had a guest a while ago say we wanted people to come into the options market. We wanted new traders to start trading options. We just didn't know they were all going to come at once. And that's kind of the feeling I think a lot of people have had for
well said.
The better part of the last couple of years. Mr. Matt, same question for you, sir. I know you've been kind of on the skeptical tip, which I don't blame you. I was skeptical for 2020 and all of 2021. I finally had my skepticism beaten out of me. Do you remain skeptical for the rest of the year? Or do you think we could make that old college try over the goal line, sir?
Well, yeah, I mean, I think what I was saying was it's very Fed related. I think QT is going to hurt options a bit. when they start tightening. I think that'll hurt. But Bill asked earlier, what asset class has gone up, and it might not be an asset class, but as we've talked about many times here, puts. Because a lot of times your gold's not going to protect you, your fixed income's not going to protect you, cash isn't even going to protect you, but puts might. And so I think, people are recognizing that options can give you a slightly different payoff picture, and they're using them. And I also think a huge thing is the index options daily expirations. I think that it is a huge thing. I mean, I never traded SPX, and now I'm trading it because I love trading the day of expiration. So and we could see that the percentage change is huge, and I think that leaks over into ETFs when you get that much trading in index options. So kudos to the SIBO for that, and just in general, people listening to shows like this, getting more educated and trading options more. Again, though, I think that QT, notwithstanding extra volatility, that's going to help options. QT is not going to help. So I remain a little lukewarm on it. Should we say it that way, Mark?
Interesting. Still fading. I like it. Interesting stuff here on the show. Speaking of interesting stuff, you folks always bring it with some interesting questions. Let's see what you have on your brains this week. It is time to open up our office hours.
It's time to answer your pressing questions about options. It's time to start our office hours. You can become a part of this segment by leaving a question on theoptionsinsider.com, emailing us at questions@theoptionsinsider.com, or via social media at twitter.com/options, facebook.com/theoptionsinsider, or stocktwits.com/optionsinsider.
All right, everybody, welcome to the office hours, the portion of the show where you folks take the reins, your questions, your comments. Just like this one from Ray C. An interesting question. Ray C wants to know, hello, Ray. He says, my question pertains to the inverse VIX product, SVIX. It's a tough product for many investors to grasp. Also, this product category is littered, I like this, is littered with the wreckage of broken products that attempted this in the past. Wow, I like this. You're really painting a picture with your words here in this question. Well written, Ray. He said, read that again out there. This product category is littered with the wreckage of broken products that attempted this in the past. I would like to know your thoughts on this product category and its suitability for advisors to include in client portfolios. Thank you. Wow. Excellent question. Very well written. You might have to win a prize for that one, Ray. It's just a good question. I appreciate some compelling verbiage here. All right, Mr. Bill, we'll start with you. I'm curious for your thoughts. Maybe we'll start there. What are your thoughts in general on the inverse vol space? We know, as you mentioned, it has had some issues in the past. XIV springs to mind. So what are your thoughts on the category as a whole? And then B, he wants to know your thoughts on the suitability of this product for advisors.
Again, just one person's opinion, and that is I stay as far away from inverse related products as I possibly can. Again, most of the assets that I'm managing are retirement accounts, 401ks, mostly people that are age 55 and above. And it's the inverse funds for me, listen, it's like the VIX product, I think technically is kind of designed to go to zero, right? So not the VIX, but these VIX ETFs, right? They continually have these reverse 10-for-1 splits trying to make them attractive. From an investment advisor side, I can only tell you that some of these statements and verbiage coming out of the regulators were sort of negative to holding inverse products and volatility products for client accounts. Because the problem was, it wasn't that they were bad on a day-to-day basis or maybe a week-long trade, but investment advisors were buying, say, VIX products and then leaving them in an account for a year or 10 months or 6 months, because you get caught up doing your own. You're caught up running a business, and so what would happen is that this erosion, from the ETFs would just keep on eating up any kind of possible protection for client accounts. So really, from this advisor's perspective, I don't really do VIX products or the VXX, even covered call writing, on volatility, unless we are in the sub 11 range. Like that's maybe when I'll do it, only at the absolute extreme, and even then some. I'd be very careful about doing it. But I'm just saying, from my perspective, from an advisor, like it doesn't. It's not a warm message from the regulators, from my perspective.
Mr. Matt, same question for you. We've talked about SVIX before on this show and also even on the Volatility Views program. But if you want to express your thoughts on the category as a whole, have at it. And B, the second part of his question, it's suitability for advisors to include in client portfolios.
Yeah, I haven't made a secret that I stay away from these. I have some very sophisticated clients that know every in and out of these products, and I can't compete with that. So I don't want to compete in a playing field that I don't consider level. So that's the first thing. The second thing is kind of a benefit. I think they've learned their lesson a little bit. There isn't as much market interaction with the SVIX, so there are some benefits to the product. I think these people have learned how to manage these better. But in general, unless you really understand it, I would stay away from these types of products, Mark.
All right, everybody. That music means, unfortunately, we've come to the end of an hour-long sojourn through the world of all things advisors and option. Today, taking a pit stop in the world of crypto, which seems like it's becoming a more frequent occurrence. We'll have to have Mr. Bill on again in the future to discuss his book when it comes out, as well as the latest additions, latest products, latest cool things we have cooking in the realm of crypto. But before we go, Mr. Bill, as our guest, I want to thank you for joining us today. Give your book one more plug, and then if folks want to reach out to you with questions about the intersection of digital and traditional assets over there at CENACLE, where should they go? What should they do?
Well, they can visit, CENACLEcapital.com. That's www.CENACLEcapital.com, and reach out to us through the form handler and contact form on the page. Or they can call us at area code 847-686-4800. That's 847-686-4800. The book has gone off to the editors, and we hope to get it back in about 4 weeks. And then, we're just really going to be excited and pushing a lot of conversation and prospecting, so to speak, to the financial advisor community and estate planning attorney, just to have this conversation. And I also just want to say how honored I am to be on the show with you, Mark, but also with Matt. Matt and I were introduced about a decade or so ago, and I was always impressed with his high-level understanding of how options move, the Greeks, and the type of teaching tools that he was bringing to professional traders, now really available to anybody. So really, hats off to you, Matt. You're doing just great work.
Great work indeed. Mr. Matt, if folks want to check out all that great work you guys are cooking up over there, you always have new reports, new features, new updates. What can they look forward to, and where should they go to learn more?
Well, Bill, I really appreciate that. I was going to say the same to you, but now it only looks like self-serving. So it was great to be on with you, and I can't wait to get the book. It's very much needed out there. Holding crypto is very important how you do it. So looking forward to reading it. As far as on my side, ORATs, we continue to do a bunch where we just released a 1-minute API. So you can go back, name a minute in the last 2 years, and you could see anything that happened at that time, what the volatility at the 10-day is for Apple's 5 Delta. You could find that out. You could so it's a really great API, very granular. It's going to allow people to really graph things well, understand where things were. It's going to allow our intraday back testing, which we're starting to work on. And then our dashboard, we're starting to bring in positions and do some more systematic strategies, and also having signals built into the product. So it's there's a lot going on. So appreciate having on. It's great to be on with Bill, and talk to you soon, Mark.
There we go. Check them out over there. ORATS, ORATS.com is the place to go. Give them a follow on the old Twitters as well. at Option Rats. And of course, while you're at it, give Bill a follow at CENACLE Capital, CENACLE Capital, all one word, on Twitter. And of course, you know where to go to learn more about all the information we're talking about today, strategies for you guys in the advisors world, all the options, volume numbers we're talking about, and a whole bunch more. Optionseducation.org. That is the place to go to begin your journey to the dark side. That's going to do it for us here today on the Advisors Option. But don't worry, for all you pro folks hanging out in the live chat, no rest for the wicked for me today. We're going to dive right on into a live episode of Options Boot Camp. And then, of course, later on today, we have Brian hitting you live to tape over there on Options Playbook Radio. Back again throughout the rest of the week with our usual accompaniment of shows, and then back again quite soon with the next episode of the Advisor's Option. Stay safe out there, everybody.
Advisor's Option is brought to you by the Options Industry Council. The OIC was created to educate investors and their financial advisors about the benefits and risks of exchange-traded equity options. For more information on how the OIC can help you implement options in your practice, please visit optionseducation.org. The Advisor's Option is also brought to you by Option Research and Technology Services. ORATS is your source for options backtesting. It's where you turn your ideas into results. Founded on the floor of the SIBO over 2 decades ago, ORATS is a full-service option research firm focused on helping you develop options strategies in line with your investment objectives. With a state-of-the-art backtesting platform, scanning, and implementation tools, ORATS offers end-to-end option strategy development, making the whole options trading process easier. For information about backtesting, scanning options data, including dividends and earnings, visit ORATS.com or email Matt Amberson at matt@orats.com. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.